Let me send out this link. See this. US30 is all over the place today. Let's see. All right, just waiting for Vishnu to join the room so we can start the session. Here we go. Hey, Vishnu, can you hear me? Hey, Vishnu, can you hear me? Let me see if this is working. I think it is. Signal.
Hi, Shawn. Yeah.
Hey, Vishnu, can you hear me?
Yeah, I can hear you.
Good, good, awesome. How you doing?
I'm doing fine. Doing all right. Yeah. I just woke up like half an hour ago.
Yeah, you guys are opposite time of me, so it's like nighttime over here, almost time for bedtime, or for you just waking up.
Yeah, I just waking up, prepping for the London session later.
Nice, yeah, lucky. I wish I can be up that time, but I get sleepy once it hits midnight here.
I mean, yeah, but I'm still how to say what do I want to say? Yeah, just taking it easy lah, not rushing things, and then just learning stuff one at a time.
Yeah, definitely. No, that's a good thing because you don't want to rush in and then end up blowing your account too early by making mistakes. It's good to like take it easy until you're like 100% comfortable, and then you can start taking trades. Because once you're like 100% comfortable, you can take trades and you won't be worried about any of your positions.
Yeah. Got you there. Yeah, actually, what's the purpose? I had some questions lah. I wanted to just ask and then see what are your thoughts on those questions. Some I think there's one that I kind of saw something going on with the Ichimoku cloud, and I wanted to ask you whether is it valid or not? Is it? Yeah.
Oh yeah, definitely. So how are you applying it? Is there like a specific way that you're using it or a specific pair? I can pull up the pair so we can look at it more specifically, how you use it, and then I can show
Actually,
you.
I don't know. I haven't really back tested this thing, but I don't know. To me, it's kind of quite lame lah. It's quite lame, but it somehow works if I know how to piece it together.
Yeah, yeah,
Yeah,
definitely. So is there a
it's
specific pair that you like to trade it with or that you like to test it with? Because I can pull it up here
um,
and we can see.
okay. You can probably test it with US30 or I think US30 is fine. US30 is fine. It's actually the Ichimoku cloud, but not the full cloud. I took away the cloud and I took away the conversion line. I think I just used the baseline.
Oh, gotcha. Okay. So you don't use the cloud at all, right?
Yeah, I don't use the cloud, but I kind of I mean I've not tried it. I've not taken any live trades with this yet, so I'm just using the baseline, the Kijun Sen.
Mm-hmm.
Yeah, the
Yeah.
Kijun Sen. I just use it as a support and resistance level lah, some sort lah. That's one line. So if prices moves like prices moves up and then closes uh, on a buy, and then I'll wait for another candle to sort of like proceed in that direction that I want to buy, then I will up to. But I'm not too sure how am I going to use the momentum signal with this, or does it even is this even because it's kind of nonsense, I think, this way.
Let's see. So which time frame do you usually trade it on, or that you look at it on? So I can analyze and see what you're looking at, and I can give my input on how to implement that.
Actually, the on the 10-minute or 20 minutes should be fine because since we are also doing USD on the 10-minute, right?
Oh, gotcha. Okay, perfect. So
Yeah.
just looking at this from a bird's eye view, it looks like you can develop your own strategy using this. One way to do it is you can probably, I mean, it doesn't look like a very like a, we might have to have like a bigger sample to identify this, but it looks like one way to identify it is to like first you'll identify the direction of momentum. So like for example here, we have a like a sell signal, right? And
Yeah.
then you can see as it crosses below this baseline, which is similar to a moving average. I think there's probably better tools for you to use with regard to using this because you're basically using it as a to identify the trend, right? You're trying to see if
Yeah.
price is trending, it breaks the trend into this direction, and then you
Okay.
take the trade there. So it does work this way. Like in this situation, you can identify the signal, and then once it breaks past and closes past the baseline, kind of similar to what happens right here.
Yeah.
Um,
But he has to close. Yeah, he has to close below the baseline. Yeah. If you want to take a
exactly.
stand.
Yeah. So if that happens right there, you can probably take a short position, and then you can probably ride that to TP like how it did right there. The problem with this is that it doesn't always work. So you'd
Yeah.
have to have a bigger sample to identify, and you'd have to include like other requirements as well. Like for example, here we have a sell signal, so you probably want it to close again below it, but it doesn't close below it. You have a buy signal, it's already above it, so that just wouldn't qualify. Again, right here we have a sell signal, a buy signal. I'm just trying to see if there's another entry
Yeah.
that we can possibly find just to see how it works. Okay, so like right here, we have another situation where we have a sell signal. It closes below that baseline that you're looking at. You can insert a short position right here. I don't think this hits though. So it looks like it, oh, I mean, it gets close. So maybe if you implement some sort of exit strategy, if it reaches
Yeah.
50%, maybe move your
That
stop
was
loss and
something.
profit, then you could probably, possibly exit this trade halfway through somewhere around there. That could work.
This might be a like it might be a valid like a TP1 kind of strategy, like a TP1 or maybe a short scalp. But I don't think I can do this for like a full TP kind of trade because it's kind of risky also. I think.
Yeah, the strategy is very risky. I mean, it works. We've seen here it works. It's just it definitely does look very risky,
Yeah.
because it just there's a lot of fake outs that you'll run into. Especially for an asset like US30. The
Mhm.
thing with US30 is it doesn't really respect technical analysis. Most of the time it breaks through the structure and then it'll just spike around with no warning. Like right here, this drop happened, no warning. This was mostly based in news. Um, so I'm not sure if it'll work very well with US30 because US30 is it's more of a news-based strategy, a news-based asset. Like if there's news in the market, it'll push the market in one direction. It's not like Forex where it'll respect the structures and it'll go back and forth. For US 30, you might be in a position that all of a sudden it shoots in one direction because there's some sort of news that is released. So
Mm-hmm.
definitely, I think this could be used for scalping, but I wouldn't use it for anything long term. Because like you can see right here, if you're holding this for very long right here, it might have, let's see, hit stop loss maybe, or no, it keeps going. Oh yeah, it ends up hitting
Yeah.
stop loss over here. So eventually it hits stop loss, but it bounces around.
Yeah.
When you least expect it, it has a huge spike right here. You don't really see that coming.
Yeah.
Yeah. So this, I mean, this is something that could work. So this is like a baseline for you. From this point, you can, test it if you'd like to see how it works. And then you can change different things or add things to the strategy. That way you can increase the win rate. Like for here, you probably could have won this trade if you, adjusted stop loss, exited at some point here for a scalp. It's still a nice
To,
profit. Let's see.
oh yeah, I could also possibly like, I mean, when it comes to the second candle from where you started the run,
Mm-hmm.
I'll probably be putting it to uh I probably move my SL to break even.
Break
Yeah,
even. Yeah, yeah.
definitely.
That'd be a good idea. Because like right here, if you enter this trade, once it drops far enough, you can make it move to break even, and then you can
Yeah.
go for the next one. So this one maybe close out break even. Again, you have a buy signal here. If you
Mm-hmm.
want to take this one right here when it breaks above, do the same thing. Once it reaches a certain point, you move to break
Yeah.
even, and then you just keep doing it. If you want to trade high frequency, you can do that.
Mm-hmm.
It looks like it works fine. Like even right here, closes below. Once it goes in profit, just move to break even, and then you just keep breaking even until you get the big move like something like this right here where there's no drawdown.
I see. I see. Maybe possibly I could also use this. I mean, I can use this together with the trend meter. The trend meter can also be a very good confluence if I'm going to take a trade. So if it's like trending down, I probably just looking for like sell entries and sell entries with it should, but then this is trending sideways.
Yeah, exactly. Like for this, the trend meter does work well. Like for example, here, see, this would have been a nice entry. Price broke the
Yeah.
structure. It broke the baseline. You had price trending up. If you took this long position here, you could have played out very nicely. Full TP, no drawdown.
Probably
So
the only drawdown I think would be the patience. I think the patience.
yeah, yeah, definitely. I think that's the main thing. It's just being patient with it.
Patient,
Uh,
yeah.
so the problem with this too is if you use the trend meter on US 30, it doesn't really trend very often. You can see here it doesn't. Most of the
Yeah,
time it's below.
it's always in blue.
Yeah. The problem with US 30 is that it doesn't really, the best time to trade it is going to be obviously during, US hours, but it's going to be hard for you to find a trend. Obviously it'll be a lot safer if you wait for the trend, but sometimes when the trend comes, it doesn't last for very long. It's a very short time.
Yeah, it just kind of dies down like halfway before you hit your goal, and then you're probably thinking, what am I gonna do to?
Yeah, during this whole time period, you're like waiting, days for it to trend.
Yeah,
And
exactly.
yeah.
I don't think much of us would have that sort of patience unless you're probably setting a chart 24/7. I think.
Oh yeah, definitely. Yeah. One thing that you can do instead of the trend meter, you can use the pivots because it'll
Oh
give
yeah.
you the short-term trend. So like right here, you can
Mhm.
probably use this, for example. Maybe we'll change the color of the Ichimoku line so that it'll stand out. Let me see if I can change it here. So for the Ichimoku line, maybe we can change it to something that's very bright. Uh, maybe
You can probably thicken the line also. I think.
yeah. Oh yeah, and thicken the lines as well. There like that. Okay, perfect. So we can do something like that. Um, and then you can use this as your baseline. Basically, you can basically use all of them. You can use the pivots plus the Ichimoku cloud because you can see here when price closes above it, and then you take a long position there, full TP, and then get again same situation here. Price closed below right here, below the pivots and the baseline. You take a short position right there, full TP as well, and then yeah, it looks like it works pretty nicely. You can basically catch it when it swings in direction, like when it swings
Mhm.
above, like right here, you can probably take this as well. I mean, it looks like this might have hit stop loss if you didn't, or no, I guess it would still continue on. It would continue on, and then at some point you can move it to break even.
Yeah.
So right here, like if it broke above this area, you can move it to, break even. You get kicked out of the trade, which is fine. Break even is fine. And then again, right here, it closes below, take another short position here. And then you do the same thing. Once it reaches that point, you move it to break even. And then you can just keep trying it until you end up hitting TP, or if you get stopped out. But looking at this here, I think this looks it looks a little bit better than the other way of applying it. The only
Mm,
problem is that when it goes into consolidation like this is where you're going to get into some trouble.
yeah.
It just goes sideways.
But then again, if it goes into consolidation, I think any strategy would take a while to hit. Am I right? Yeah.
Yeah, exactly. The thing with this is that this was happening during New Year's Eve, so obviously you
Mhm.
wouldn't have been trading this day anyways. So during this time, you probably would have skipped trading during December 31st up until Christmas. So we could probably avoid these specific times where there's not very much volatility. But it looks like, again, once it crosses below, like right here, it crossed below the pivots and the baseline, you can take another trade there. It looks like it eventually hits full TP, or you can have other strategies where you move it into stop loss once it reaches a certain point. So
Yeah.
that looks good there. That looks like a good one. Again, right here, it breaks above. You can take a long position there. And then, yeah, when I think for this strategy, when it reaches like halfway to TP, maybe 50% profit, maybe move your stop loss in profit so that you can lock some profit in.
I mean, we all would say that we will take stuff to full TP, this and that. But I think ultimately we are still like beginner traders. So once it hits TP one, or once it's going near there, I'll probably be putting my what's this? I'm putting my stop loss in profit, like way in profit, like probably quite tight, so that you will. I'll just end up taking the TP one and then just uh, waiting for for another opportunity.
Yeah,
That's
exactly.
what always happens.
Yeah. Yeah, exactly. For US 30, I mean, if you're going to be scalping it, you're always the main key for scalping is going to be moving your stop loss and profit. You should never always aim for the full TP, because when you're scalping, it moves so fast where it's better
Yeah.
for you to, move your stop loss in profit as it continues to move up. And then you actually lock in profits, because when you're scalping, you're taking a lot more trades. So, those small profits start to add up, a couple of $100 here and there. It'll add up to maybe 1,000 within like X amount of trades.
Yeah, that's what I'm saying. Because like rather than you taking a full TP, or if you're scalping, you're taking a full TP, you can just within that same time frame of maybe 1 to 2 hours or 3 hours, you can probably hit 3 or 4 scalp sometimes, and then hit your full TP, like what you say, when it combines.
Exactly. Yeah, yeah. So if you have like, say if you have two trades that hit, half TP, that'll add up to one full TP. So if you're taking multiple trades, like for example, here when we were looking at this one, this might have hit, half TP here. And then again, this position over here, again, another half TP over here as well. That will add up to one full TP instead of taking a one big loss if you end up holding on to it for too long.
Yeah, exactly. Yeah.
Yeah,
So yeah, probably yeah. Sometimes we would. Yeah. Do you recommend? Okay, I don't think you would recommend stacking trades when it goes against you. Like
oh
I
no,
think it's called
never.
never.
I know a lot of people that do that. They end up blowing their account really fast.
Yeah,
Uh,
is that called the DCA strategy? Is it?
there's a lot of names for that strategy. I don't know what the specific name is for it.
Dollar cost average or something like that. I don't know. I heard of those terms.
Yeah, it's like you're basically just doubling down on your trade because you think it's going to come back, but then a lot of times it doesn't come back. A lot of people get lucky sometimes. They'll get lucky for like maybe a couple of weeks. Because we had some people like that in the group before. They would do that and they would get lucky like 1 week, 2 week, and then the third month they're just disappear. You never hear from them again. They come back a month later, they say, "Oh, I took a break," but in reality, we know they blew their account running that strategy.
Because they are trying to play it off trend meaning hoping for the trend to reverse in their direction,
Exactly. Yeah,
something like
they're counter trend trading.
that. Oh, okay, that's not very, that's not a good idea lah. I think.
Not for spot trading. I personally don't think it's good for spot trading. Maybe if you're trading options, then it's good because you're
Mm,
trying to. Are you
options.
familiar with options?
Options is a totally different ball game.
Yeah, like for example, like when you're trading options, they'll have like strike prices. They'll have prices here where it's like, say if you're entering, a trade right here, and then if I take everything off the chart, let me hide this, hide this. Yeah, so for like options, they'll have like prices here, and then what you're doing is you're betting on where price is going to reverse. So right here, you're betting that price is going to be below this price or price is going to be below here. So if you're trading options, then it would make sense to do that type of strategy because you're waiting for price to, get to this point and then,
Mm-hmm.
stop below there before a certain time period. So then that makes sense to counter trend trade. But if you're trading directional, obviously you want to trade where direction, where, momentum is already going because you're just betting against the market if you're doing this. And if the momentum is very strong, like how it is right here, it'll break right through it. So if you're trading that way, like, here you enter a sell, you're like, okay, it's going to drop here, you enter another sell, and it just keeps going farther and farther until your account just gets blown at that point.
I
You get what I'm
see.
saying with this?
Yeah, yeah, I
Yeah.
understand. Hey, actually, I wanted to ask you another thing. You just mentioned earlier about using the Ichimoku's the Kijun Sen against with the pivot scalping strategy. So I just want to could you like, give me a short rundown on the pivot scalping because I
Oh,
was
yeah.
trying to figure out that, but I don't know like does it have to hit the third line, the second line, or any line, and then retrace back, and then you know.
Yeah, yeah, no, definitely. So let me show you real quick. So for that strategy, the way that you would apply it would be, let me see if I could find where the market was actually moving. Okay, so like right here, for example. So like, for example, right here, you can see that price, or let me go forward a little bit. Price comes up. It'd probably be on the second candle if we have another buy that appears somewhere over here. Yeah, for like this, for example, here, this would be the pivot entry. Sorry, let me get my dog.
No worries, no worries.
Come here, Kai. I don't know why he barks. Whenever someone walks by, he always barks. Someone walks by outside. So yeah, let me put the requirements here for the strategy K2 pivots scalping. One, you're going to identify a trend using K2 pivots. Two, identify tracement. Three, identify rejection of K2 pivots. Here we go. Lastly, identify valid K2 signal. So yeah, I'm sure you're familiar with the requirements. Very simple. But I could see where you might be confused with. So like for example here, I'm going to use this. So first we're going to identify the trend. So first you want to make sure that price is above the pivots. The pivots are angling in the same direction and they're spread out. So we can say that the trend started right here when price swung above. So that's going to be requirement number one. Requirement number two is you want to identify a retracement. So you can see price comes up, comes down, comes back up again. So from this point, price has retraced from up here because it establishes a high and then it comes down. The third requirement is to identify the rejection of the K2 pivots area. So I think this is where the confusion lies, where you're not sure where the rejection should, be
Yeah.
identified. Basically, the rejection would have to be within the vicinity of the pivot. So it'd have to be somewhere around here. If price comes too far down here, like way too far, then this could be, it could be a hint that price is likely to reverse at that point. But if it comes to somewhere like above here, you can basically measure it to see how far is it pushing. If it pushes maybe farther than like 400 or 500 pips down here, then this could probably be a hint that price is going to possibly reject up. Because at this point, when it comes down here, it'll probably come back, retest the pivots, and then come back down in a reversal, right? So for the third requirement, you just want to make sure that the rejection is either within the pips or not too far past it, because then that would be, some sort of reversal. Like for example, right here, you can see price comes up slightly past the pivots, but it only comes up about, let me see, about 200 pips, not very far. So at this point, it comes right back down and then corrects back to the trend. But for example, here, when price comes up very far up to here, and then it comes down slightly right here, this would be way too far. So when the price closes from right here all the way up here, this is like 1,000 pips. So at this point, you can identify this as it's probably not going to come back. So do you see the difference between here, here, and like around here?
Yeah, I see the difference. But then, if it's this case, then you can't possibly apply the pivot strategy like almost any time. You still got to wait for the right time to apply the strategy, depending on how it rejects off the pivots, right?
Exactly. Yeah. So like that would be the third like main requirement, or like the main requirement. I think the most important one would be the rejection, because you want to make sure that it's not too far to the point where it's going to likely reverse. Like for example, here price comes up a little bit, but it doesn't push too far. It's only about, let's see, a couple hundred pips, maybe 200 pips away before it comes right back down to where it was previously.
Mm-hmm.
Um, and this is where you'll identify where there's like noise in the market. So like even right here, you possibly wouldn't even want to trade this because it's not trending very heavily. The requirement for the trend requires that price is below it and then that it's spread out. Like the pivots are not too close to each other. Right here, they're too close. So we wouldn't have taken these trades, within this area, even this entire area right here. This would be a difference over here because the pivots are very spread out. So you can identify that the trend is actually pretty strong in this area over here.
I see,
So
and it's also it's better if you take the if you take a buy or sell off the pivot scalps with a signal instead of taking without a signal.
yeah. So the signal would be the fourth requirement. The last requirement, that's going to be the last thing that you need to confirm. If there's no signal there, then there would be no entry. So like, for example, here, this would be the entry for the long position here, because all of the requirements have to be met. For the first requirement, you need to identify the trend. The second requirement is to identify the retracement right here. The third requirement is the rejection. And the last requirement in order to take the entry is there has to be a valid signal right there. So for example, right here, if you were to take this trade, you would put your stop loss, either at the pivot, the swing. It's really up to you, like where you want to put it, depending on how you're trading it. If you're scalping it on the lower time frame, obviously you want it to be very tight. But if you're running this strategy on a higher time frame, then you can put it a little farther. It just really depends on how you're applying it, because it works on all time frames, not just the 10-minute. So if you were to take this trade here and you let it run, obviously it would hit full TP right there.
Oh yeah, but I mean, if it hits full TP, I can also still choose to like take out my take profit and then let's slowly like do a trailing stop loss.
Oh
See
yeah,
where it goes
definitely.
to the end.
Yeah, that's actually how I do it. So if price breaks structure like that, what I do is I'll move my stop loss. I'll take off my take profit,
Yeah.
and then I'll just move my stop loss in profit. So as price, continues up further, I will move my stop loss to possibly where the pivots are, because the pivots are there for a reason. Generally, price is going to come back, retest the pivot, and then either continue up higher or it's going to reverse on you, come back down. So
But at least you've secured a bunch of profits, so it doesn't hurt. It's sometimes you stop your take profits out too early. It might be a waste, I think.
oh yeah, no, exactly. So like for right here, if you're able to monitor your trade, you can just keep moving it up. So as it moves up, you can put your stop loss either at the third pivot, or maybe even the second one. I wouldn't put it at the first one because it's too close. So I'd probably move your stop loss to either the yellow or orange pivot, which is number 2, number 3. And then as price continues to move up further, you just move the pivot with it. So as it continues to move further, you just move it with it. And then right here, of course, or actually, let me go back. So right here, the yellow pivot has actually moved a little higher. So you'll just keep moving it above. The only problem with applying this is you have to pay attention. A lot of people don't want to do the work to trade. So a lot of people just want to have a target, but if you want to make the maximum profit, you have to, follow the trade. So right here, you just keep moving your stop loss and profit. And then as soon as it comes down, it, obviously stops you out in profit at that point. So right here, you could have locked in maybe, let's see,
I think it was 2,000, I think, or more.
about like 750 pips. It's,
Okay.
I think during this time, this was a slow period. Yeah, this was 2 days ago on the January 3rd. So the market just opened, for the trading week. So the market wasn't too fast during this time. But if you applied the strategy, you could have locked in, a lot of profit versus, just applying the TP, which would have been down here for like 400 pips. So instead of locking in 400 pips, you locked in about 750 pips, which is a lot nicer in comparison to profit wise.
Like double of what you're supposed to lock in,
Exactly. Yeah. It takes some work, you have to pay attention, focus, but obviously it's going to pay off if you do it properly.
To me, if you tell me this, it's really worth it's really worth the patience. If you can just pile up the trailing stop losses up and up and up until
Oh
it
yeah.
dies down. Yeah.
Yeah, exactly. That's why for my exit strategy, if I don't know if you looked at the original one, the original exit strategy, it was to use this type of exit strategy where you move your stop loss and profit. But some people are just, they don't want to do it because they think it's too much work. So that's why I created the simple one where you just move it once it reaches the TP1, TP2, and then so on forward, because there's just too much confusion. So I try to make it as simple as possible so everyone can apply it properly.
I see. When you said you mean by the one that you showed, is it the 25%, 50%, 75% stop loss strategy?
Yeah. So that would be the original one. That's the one that I used to apply before. So for example, for that one, it would be the same thing. So you would have your, like, for example, here, you would have your TP somewhere around there. And then as it reaches, 25%, you move your stop loss. Again, if it reaches 50%, you move your stop loss, and then you can take off your take profit. So then when that happens and it moves above, then you just move your stop loss up to the entry there. And then you just keep sliding it up higher and higher where the pivots are.
I see.
Yeah. So there's a lot of ways to apply it. I mean, the more complicated it is, it's going to be harder to explain to like a normal trader. But for you, if you like want to learn, I can teach you all the things that I do, because obviously the way I do it, it's a little more complicated. It takes more focus. You have to be, very disciplined not to take profit too early or to, leave your stop loss far down. Because a lot of people, they don't like to move their stop loss in profit. For whatever reason, I don't know why people don't like to move it in profit. Because they feel that they're not making enough profit. But in reality, if you're trading, a decent size account, it doesn't really matter.
I think it gets the point. They know they can make more, and they get greedy, a bit more greedy.
Yeah, exactly. They get greedy. Like for me now, since I'm trading, bigger accounts with FTMO, it makes more sense for me to lock in profits because, I'm trading 100K accounts. So 1% is like 1,000. I'd rather take 1,000 rather than take a loss of like 3,000.
I think if you were to take 1,000, it's probably going to be like 3,000, right? Since it's 3 accounts or 2 accounts, 3 accounts.
Exactly. Yeah, definitely. That's exactly why I trade that way. Like for US 30, even with myself, I move my stop loss and profit and I get kicked out early and I make, pretty nice profit. Like I think today, how much did I make today on that trade? I entered it twice. So on the first trade, I think I made 1,488, and then I re-entered again for 484 because I exited at TP1 here, and then again over here I just finished off the rest of the trade. Some people don't want to take profit, but if you're trading a bigger account, your profit is a lot higher compared to if you're trading $100 account. So like if you're trading $100 account, $10 doesn't seem very much. But if you're trading $1,000 account, of course $100 is going to seem like more. And then if you're trading higher than that, you'll make like 1,000 per trade, which makes more sense.
I think even for yesterday's trade, when you re-entered, right, you could have dragged it on till where it would have died off, because I think it hit like what 300 plus or something like that.
Yeah, it did. It went pretty high. So like today, where did that trade go? Let me see. It was at 6:30.
But I mean, probably it's quite late into the night, I think.
Yeah, it was getting kind of late into the session. Like right here, I think this was where we took it. I probably could have removed my TP and then just kept riding it up. Yeah, because it actually went a lot higher.
Yeah.
So it went right there. That's the full TP. If I remove my TP and I just keep moving my my stop loss and profit as it continued to move, I could have probably locked in a lot more up here. So I could have
Like,
locked in the 1500, and then on top of that, an extra maybe 650 pips right there.
yes, that's like, oh yeah. But then again, like you said, you have to have I mean, you have to have the time and also the patience, because you can't be 24/7 be on your screens, you know. You still have to sleep.
Exactly. Yeah. Yeah. No, I used to do it all the time. I used to be on my screen 24/7, but after trading for so long,
It's
you
just,
start to realize that your health is more important than making
yeah.
these profits.
I mean, you'll get to you at some point, and then after you'll be like, screw this. I'm just gonna bet. I'm just gonna take more profits the next day or some sort of that. Yeah. I think
Yeah,
there'll be
exactly.
profits every, yeah.
Yeah, exactly. And with our win rate, I already understand, how the profits are going to come. So it's like, I'll give up trading 24/7 and I'll just make, steady profits throughout the year. Just applying the same strategy once a day. Like for US 30, I used to scalp this like all day, make a lot of profit just scalping it all day. But you can lose a lot of money too. So I went from, scalping to just trading once a day and then making decent profit because the win rate's so high for, that specific strategy.
I see. So you let the pips do the talking.
Exactly. Yeah. So I pretty much set my trades and I let them run. In some instances, I'll take off the TP and then I'll do what we just discussed. I'll move my stop loss. But most of the time, I have other things to do, like how we're having this mentoring session today. I have mentoring sessions all day, so I don't have time to really focus on the trades as much as I used to before. But it's fine because I'm here helping you guys, so I have a benefit in another way. It's not through trading, but it's through teaching you guys how to learn exactly what I'm doing.
You see, that's good, man. That's good.
Yeah, because it gets to a point where it's like, it's nice to make profits trading, but it's like, who can you share it with? Who's learned from you, who's done the same thing that you've done. Because like for me, when I started trading, I didn't have any mentor, had no course, no nothing. So I kind of like want to pay back basically. Like I went through all this trouble to learn these skills, and it makes I get more gratitude out of like me teaching people rather than just making profits and showing my profits to people, right?
Yeah.
Yeah, definitely.
Yeah. Actually, pivots. I'll probably backtest because I've already started my FTMO, but it's only US 30. Uh, it's only US 30, and probably I'm looking into UK 100 also.
Oh yeah, yeah, definitely. Yeah, they
So I took the win yesterday too when I dragged my stop loss into profit at TP1. I got stopped out. I think just above TP1. I think.
oh yeah, yeah, for was it
Yeah.
the US 30 or the UK 100?
US 30, the one that you got stopped out at I think 1,005. You got stopped out at
Oh
thousand
yeah,
five
yeah,
hundred
yeah.
bucks. Yeah.
Yeah, I think I posted my signals here. I got stopped out there for the first
Yeah.
time.
I got stopped out too lah. I got stopped out at 1,400 something. I think.
No, it's not bad. Yeah, it's good. The thing with that is like, well, like I mentioned, with FTMO, it's more so about locking in profits. Because for FTMO, what they want from you is they want you to be a responsible trader. A lot of people aren't responsible with trading. They want to go for the big wins, but in reality, they want you to just lock in profits so that you can
Yeah.
be safe. That way you don't blow their account when they give you the real account.
Yeah, exactly. Uh, I mean, if you are trading, you probably people want the big wins, but actually it's the small wins that the ones that make you big.
Yeah, exactly. It's the small wins and eliminating losses. Because the thing is, if you
Yeah,
just keep stacking small wins, like maybe 1,000 each day, and then you have no losses for the whole week, then it's going to add up. Obviously, at the end of the week, versus you making maybe 3 times your profit one day, and then you lose 3 times your profit the next day. You're still break even. You have no profit at that point.
the take what is offered on the table and just move on to the uh, next trade lah.
Exactly, yeah. And I feel like the reason why a lot of people are used to trading that way is because the way that they're taught to trade, that they learn strategies that are not high win rate. So, they have to take a lot of losses before they have like one big win. So that's why a lot of people like to trade that way. But, if you look at a lot of professional traders, like a lot of traders that trade for banks and stuff, they trade the same way that we're trading. They go for small profits and they just eliminate risk. That's what they're called, like like risk management or asset risk
Mm.
management and stuff like that, because their goal is to eliminate risk. It's not to go for these big profits. It's more so to eliminate the losses so that those profits just keep stacking over time, and then they just keep compounding as you increase the lot size of your account.
Yeah, man. Yeah, I totally agree with you on that. Yeah, it's always the small ones that I used to trade real cash, but a small account was probably $1,000. Then we would like most of the time we would be in profit, but there was no such thing as exit strategy because I didn't know of this like how the exit is either I take all or I take nothing.
Oh yeah, all or nothing, right? Yeah.
Yeah, that's what kills a lot of people, I think.
Yeah, I mean, because the thing is, you never know when it's going to be a bad week. Sometimes you'll have good weeks, and then all of a sudden you have a bad week. And if you keep doing the all or nothing, you can deplete your account very quickly if that happens. If there's no risk management being used.
Yeah, if we can possibly move to a point where a bad week turns into small profits, then you know you are there. There.
Exactly, yeah. And I knew you've been following us for a while. Like, for a lot of my trades, like we rarely have a bad week. Like I don't know if we've had a bad week in a long time. I think the last time we had a bad week was in November, but it was because of the elections. So the market was moving a little different.
Yeah.
But even if you lock in the small profits here and there, and then you don't, as long as you close the week in profit, I think that's the main goal. Close the week in profit, because if you close like every week in profit, even if it's a little bit of profit, you'll still be heavily in profit at the end of the month. And then you keep doing that every single month. Obviously, your account's going to keep, compounding if you trade, based on percentage, not off pips or off profit. Like a lot of people, they try to calculate their success off like, how much profit they've made. But in reality, if you just do like 3% risk every trade and you win more trades than you lose, you're going to be in profit eventually overall.
Yeah, definitely.
Yeah.
Yeah, I was actually wondering. I asked this question earlier, and then you replied for the swap spread.
Oh, the swap spread. Yeah, yeah.
Yeah, the swap spread because we took a trade. I think the GBP NZD, and then I was probably going like preparing to hit to it because I couldn't take it because it would probably be my time 6 a.m. and I couldn't wait until then to like remove and then put back the the swaps at 7 a.m., which is I think a 1 hour interval. So was wondering, like you said, it's all right to just take whatever uh I think the swap spread amount and just hold it till it comes out of that timing, is it?
Yeah, the swap spread it's not that bad. It's a small little fee. It's like a little tax. I think it's maybe like maybe less than 5% of your open position. So I think if we take US 30, we hold it one day. I think the swap spread to maybe like 30 or $50. So it's not that much if you compare it to your profits. If you hit like 1,000, then you only take away like maybe less than $100 from you. So the swap spread isn't that bad for all assets. It just depends on what you're trading. So if you're trading US 30, the swap spread's a little more heavier. But if you're trading Forex, it's usually just a few bucks. It's not that much. So it just depends on what you're trading, and depending on your broker, because some brokers charge a lot for swap spread, while some other brokers don't charge as much. So it's really broker based, depending on what you're trading with. But for FTMO, I wouldn't really worry about it too much. Uh, Only if you're getting close to your daily loss. So if you're getting close to your daily loss limit, then I'd be very careful because you don't want to go over that. But um, other than that, I don't think there's really too much to really worry about for that specifically.
I see. If you are in prof, if you're in profit, then it shouldn't be a problem. But yeah, if you are on the verge of like getting it like not passing any of the criteria, then probably you wanna like clear
Yeah,
off your stop loss and take profits, is it?
Yeah, in that situation, if you're like in the negative, then you could probably just close out your trade and then just reopen it after the swap spread, just to be safe. Because sometimes price will gap a little bit. It doesn't gap too
Mhm.
much, but just depending on what's going on that day. Like if there's a huge news event, like there's elections or something going on, then yeah, price will probably spike. But if it's just a normal day, it's probably not going to spike too much, so it won't affect you heavily. But if you want like to be safe, because for me, I don't want to base my whole account on the one trade that I'm holding into the swap spread. If I can get out of that trade, I'll get out if possible. But if not, and I have some cushion, then I'll just hold on to it because it's not like super required that you get out of the trade right away if you have some leeway for your profits.
Oh, I see, I see. Oh, that's good, man. Yeah, what else would I want to ask? Oh yeah. Um, uh, just your plain 6:30 PST US 30 uh, entries, right? Do you like when you get a sell signal, but you sometimes, even if it's if it's not a fake signal, it's a positive signal, a positive sell signal, you still sometimes don't take the sell. Instead, you wait for the buy to, and then you take, because it's gonna right up instead of going down. How do you actually determine that on a, is it based on like support and resistance, or what? Huh?
So let me see if I can. Do you have an example of a trade where that happened? Because I can pull it up and I can explain to you what I was thinking.
Oh, I actually, I do, I do not know, for example, but I've seen you not take certain, like, the signals to sell, and you cannot just take a sell signal just like that. If
Mhm.
Because it's gonna go up, so you wait for the next buy signal, something like that. But I'm not too sure which example is it. I think it was. Well, I really have no idea. I forgot. Totally forgot.
Was it this one like this, like an invalid signal? Is that what you're talking about?
No, no, it's actually a valid sell signal, but you
Oh,
don't
valid
take the
sell.
sell signal.
Okay, yeah. So, oh, okay, I think I know what you're talking about.
Yeah.
I remember seeing that. Let me see if I could go back a couple days to see if I could find.
Because if we were to take signals that just come, it's then we just blindly following the signals, right?
Yeah, exactly. Let me see if I could find that because I know I think we had one of those recently. No, it wasn't there. Go back to here, 6:30. No, not there. Yeah, because for some situations, I mean, there's other factors that come into play when um when I'm analyzing,
Mm-hmm.
but I'm trying to find an example because I do remember we had a trade like that, and we
Yeah,
didn't take it because I knew it was going to go up.
yeah,
So
exactly, exactly. So I think some of them would have uh, just taken the sell or buy just by following the signals and just assuming that it's gonna go down, because I don't really know what factors really affect. I mean, news affects, but then the thing is, news can also not affect the.
oh yeah, definitely, yeah. So this is an example right here. So this is kind of an opposite example. So we had a valid buy here, but I didn't take it. The reason for that is because I started implementing the new strategy. I don't know if you remember me discussing it. It's not a new strategy, but it's in addition to the current strategy that we apply. Basically, what I'm looking for is if we have a signal like this. So this is kind of what you were asking because
Yeah.
after 6:30, this is the first valid buy here, but
Hmm.
I didn't take it because I knew it was going to come down further. The reason for this right here was that um, I wanted price to close above the previous signal. So like for right here, if this candle right here was a sell, I would want the buy to be above this one, before I take that trade to prevent, trading in the opposite direction because the momentum was already coming down here. And if this signal right here was so low, it has a long way to go to reach that point. So like from here, it'd be like 1,500 pips to reach that point. But since it was below here and it didn't close above, that's why we skipped this trade here. So this is a new
Actually,
addition that I,
yeah, you mentioned it, but you say it's still in works. It's still in works.
I'm still testing it, but I know that it works. So I use it for our entries now, unless
Oh,
I know for sure that it's going to go in that direction, right? So like if I know for sure it's going to go in this direction, like if there's some news that's affecting the market and I know it's going to make it bullish, then I would have taken, the trade or not. But another way for me to do that is I usually use the support resistance. I try to identify if there's a rejection point that's very strong, something like, I think there's probably a rejection point here. Yeah, so like right here, the uh the support was right here, but price closed like way below it, right? So that
yeah.
was another confirmation that I used to identify that this is probably going to be a fake out, because if it's not a clean rejection like this, odds are it's probably just retesting. So it broke the structure, it was just retesting it before it ends up coming right back down right there. So that's what I identified from using these rejection points. And that's basically what happened here. It came straight back down from that point, right?
Yep.
So for something like that, that's something that I would I use as outside information that I just know from, like, my own knowledge from trading. And then like another example for this is what we use today. So I use the same, not really strategy, but I use the same analysis for today's entry. So if I go back to today, when we took that trade, the thing with this trade over here from today is that it didn't satisfy the requirement that I was just discussing from the new strategy. So like right here, if I go to this entry right here, and then, like I was mentioning, I want price to close above the previous signal. So right here, it didn't close above it. So it wouldn't have qualified for the new strategy that I've started to implement. But the
Oh,
reason why I knew it was going to shoot up is because I turned on the K2SR right here, and then you can see that there was a nice rejection off that point, what I was just discussing. So like right
oh,
there,
okay. Yeah.
so
Saw that.
yeah, so like right here, we had price come up, comes down, nice rejection off this point. It didn't close below it. It just had nice rejection off this point because it came
Mhm.
down right here, but it came back up and then it retested. So it was like a basic break and retest. So like price was below here. It broke the structure. It retested the structure here. And then this is going to be uh, a hint that price that, there's going to be a bullish move after. There's probably going to be some sort of bullish move that's going to push it up very high. So even though this requirement didn't meet, I used this analysis here to identify where the rejection was. And then of course, it ended up going straight up like that to our TP.
Nice.
So there's a lot of different factors that I personally use when I apply the strategy. And it's only from my own experience because, I've been trading US 30 every day for like the past year. I just started trading this actually recently, like in, I think, June. So I've only been trading this for maybe about 6 months, but I trade
Oh,
it every day. So I understand how it moves now because I look at it every single day and I see exactly how the patterns form for this specific asset.
oh, nice, nice. Yeah, because I was also wondering. I'm glad that I asked you to clarify any doubts I have, because it's I think we need to know. We also need to know how to identify valid uh valid signals. Like, I mean, there'll be signals every now and then, but you only take those that have some confluence with whatever you are basing on, and then you go for it.
Yeah, exactly. Because I'm more focused on accuracy. If you took every signal, it would still be profitable if you took every, but you have to take every single, right? Because that's
Yeah.
how the balance works. The balance works if you take, every signal, you'll have a couple losses here and there, but then it'll balance out at the end. For me, I want to increase that win rate. So in order for me to increase that win rate, I include other confirmations. Um,
Yeah.
for it. It's not necessary because you can always just take every trade and then, but in reality, who's going to take every trade, right? Some people are going to take some days off, and then those days off, they might miss winning trades. And then the days that they do trade, they might be unlucky and they only take the trades that lose. Even though it doesn't happen very often, it happens, for certain people.
Yeah, I agree with you. Yeah, it still happens if you don't plan on losing, but I mean, they don't plan on making you win also.
Exactly. Yeah. Yeah. Because I've tested the strategy and it works very well for like long term wise. If you're trading it long term and you're taking every trade every single day, it'll balance out. You'll still have a very high win percentage, maybe closer to like a 75% win rate, maybe 70 to 75% win rate if you take every single trade every day, because you're going to disregard news, you're going to disregard um, the days. Some days the market moves a lot different compared to other days. So like if you're taking every single trade, it'll balance out. But for me, I have other factors that I factor in. Like a lot of times I don't like to trade on Fridays because the market moves irregular on Friday. I don't like to trade during news because obviously the market gets affected by the news. And I don't like trading when momentum is not very strong. But
Mm.
for example,
Okay.
like, if you take all of those trades and you don't count those into the factor, you'll have times where the news will benefit the trade, right? It's not always going to be negative on the trade. It's going to be positive sometimes. So if you do it overall, you just take every single trade, it might have maybe 75 to 70 to 75% win rate. But with my expertise from my actual skill from trading and understanding how the market works, I'm able to increase that win rate from like 75% to like above 80%, because we lock in more trades that have a higher percentage of winning versus us taking every trade. And then I'm able to eliminate losses that could have been prevented in like other instances.
Oh, I see. So, Sean, could you just show me like an example of a trade that you would take like has strong momentum within the signal itself or within the few candles, like because some of these signals have very not very good momentum, but the signals are still being placed out.
Oh yeah, definitely. So I'll show you an example. This is kind of how I created, because I created these indicators. So like there's
Mhm.
obviously a formula behind it, what I look
Yes.
for. I'm not gonna give you the exact formula, but I'll give you like a hint of like what I'm looking for the most part. So
Mm.
like basically if I'm looking for something, let me see if I can find something right. There's a clear indication of a strong momentum swing. So like for example, let's see, because it's kind of hard to identify if you're just looking at the chart. Obviously, the indicator
Mhm.
will identify it for us,
Yeah.
but like for example here, let me see if I could just take this off. So for example, right here, let me see if I could put this over here. So if you're not using, I mean, obviously you can use the K2SR indicator, but I already know how this works because I created this indicator too. So I know how these
Mhm.
rejection points work. So I created all these indicators. Basically right here, you can see how price is moving. It's establishing higher highs. So I'll just show you from scratch, what I'm looking at from here. So if I zoom out from this point right here, you can see here that price is establishing, some sort of higher high. So like right here, if I use the horizontal array, you can see it establishes a low there. It establishes a high here, and it just
Yeah.
keeps moving up. So low, high, um, higher low, higher high, uh, higher low, higher high, and then higher low. So at this point right here, I identify that it's like it's establishing higher lows. So at this point, I know that it's trending up, right? So that's going to be one of my confirmations. Uh, once I'm able to identify that, I start to look for where it establishes lows. So like, for example, here, I marked this up as a low over here. So I would identify this right here as some sort of low. And then again, right here, it keeps establishing, higher lows. So for example, it moves up to this point over here. And then you can see from this point where it established a higher low, you can see that it's followed by some bullish candles. So we have a rejection right here with a bearish candle. Following that bearish candle, it went straight to a strong bullish candle. So right here, it's followed by bullish, bullish. And then if the next candle is bullish, this might indicate that we have some sort of momentum swing in that direction. So at this point, I would probably identify this as a signal coming sometime soon. So if I turn this on right here, or actually, see if I missed. Oh, I missed it. Sorry, I moved the swing too high. So the swing was actually from this point right here because we had the where I was establishing the lows where it
Oh,
had a
okay.
high low. So actually it was right here where it established the low, came down for the low. I mean, a high, came down, test this low right here, came back here for another high. And then it did a retest here for like a double bottom, right? Because it rejects off this point, rejects off this point again. And then it's followed by some strong bullish candles. So like right here, we have a strong bullish candle. This is, I think some people call this tweezers. I don't know if you've ever heard of that before.
Tweezer top, sir. Tweezer top, tweezer bottom.
Yeah, tweezer bottom. So right here we have the bearish tweezer, that the first one, and then it has the followed by engulfing candle right here with another tweezer. So this would be like tweezer bottoms, and then from that point you can see that we have some strong bullish candles, right? Starting to be a bullish move from this low point right here. It's just a strong bullish move, and then after this I would probably picture some sort of candle to come up from that point, because you can see here that we have a bullish signal. It's the same pattern right here as well. We have the tweezer right here, followed by the other tweezer that's a bullish engulfing, and then it's followed by the buy signal right there, right?
Yeah.
So same pattern right here again. This is probably going to have another buy signal at that point. So like there's the buy signal right there. So if you're able to identify this, you could have taken either a buy entry right here and identify this as a strong buy. And then again, same situation right here, same pattern, another buy entry right there. And then following that, it ends up, pushing up for a strong bullish move.
I see. But okay. On the second signal, the buy signal is not very strong, but you still go on with the trade because you know that it is trending up, and also it will probably hit higher. I mean, it will probably be going up instead of coming down, because the signal is the candle is very
Small.
yeah, very it's quite small, so you don't know, is it indecision by the buyers or the sellers or something like that?
Yeah.
No.
So that confirmation. So for me, if I was just looking at this without the indicator, I probably wouldn't have taken that, because
Yes.
it's too small, right? But that's where the indicator comes in, because obviously when you're analyzing it yourself, it's subjective, right? Because you have your own emotions, you have your own thought process of what you're thinking for that specific candle. Sorry, let me get my dog again. Oh, he's barking. Come here, stay here. Yeah, but yeah, sorry. What I was saying was, so for us, if we're identifying this as the tweezers, we probably wouldn't have taken this buy here, because there's no there's subjectivity. Your thought, you start to get nervous, you start to doubt if this is going to be a bullish move or not. But with the signal, it gives you that confirmation, because you're like, okay, the computer has confirmed that this is actually going to be a bullish move, right?
I mean, it is not, nothing is confirmed, but of course your chances are better with your signal in place, right? And also your your other aspects on how you take the trade.
Exactly. Yeah. So like for one, you have the confirmation because you've identified the tweezers. And then you have the confirmation that, it's a following move right here. So for me, if I was to identify this right here, I would have seen this as, this would have been the first signal right here. And then it was a retracement. So right here was the broke above, and then it's just a retest of it. And this usually happens sometimes. You'll see a lot of people, like a lot of traders, when they trade, they'll take a trade too early, and then they'll get stopped out. Like for example here, if they don't have this the indicators here, and they see this, I think, what's the strategy called? I think it's like 3 soldiers or something like that, where it has 3 bullish candles. So they'll do something like that. They'll enter right here. They'll have their stop loss kind of too close, like somewhere around here at the swing, because they usually put their stop loss kind of close. And then what happens is price retraces a little bit, and then as soon as they get stopped out, it shoots right up, right?
Yeah.
It happens all the time. It's a common issue with a lot of traders, where they get stopped out because price just gets manipulated at some point. Because like the people that are trading against you, like the institutions and the market makers, they know what everyone's looking at, So the key is not to trade how everyone else is looking. And that's why, like, for me, I usually have a wider stop loss. Like some people have like to have tight stop losses. They like to trade 1 to 3. For me, I understand how the market moves. So I like to have my stop loss wide. But, like we mentioned earlier, we use proper risk. So whenever price goes into profit, we move it into, break even or something like that.
Yeah, actually, it makes sense because those institutional traders, market makers, I think they need to like satisfy more orders. I think so. They want it. They want to kick you out. They want to like they go on stop hunts, stop hunts,
Exactly.
and then once
Yeah.
you get hunted, and then they will move in the direction that you intended to move in.
Exactly. That always happens because what they do is they'll stop people out and then they'll buy their position. So they push price down, they kick people out of the trade, and then they basically take over the positions and then they ride it up to where it's supposed to go.
Yeah.
Yeah. And that's why I usually have a wider stop loss than most other people. A lot of people don't understand, the reasoning behind that. But if you understand how the market actually works, it makes sense that why we have
Yeah.
a wider stop loss, not to get caught in these little movements here.
I used to think instead of the one-to-one, like the one-to-one risk to reward, does it even make sense? Like I was kind of thinking like what's the point when you if but then again, if your risk to reward is 3-1, you need like you suffer three losses, you win one, yeah, then you break even. But
Even,
if
yeah.
it's 1-1, it's I mean it's I don't know, it just feels better, I think. I
Yeah,
don't know.
it also depends on the strategy too. If you're using a strategy that has, high win rate, then 1-to-1 makes sense because um, obviously if you're doing a 1-to-1 and you're winning more than 50% of the time, you're going to be in profit at the end of the end of the week, the end of the day, the end of the year. It just really depends on, which trade you take. Um, if you're doing a 1-to-1 with a strategy that has less than a 50% win rate, you're going to be in the negative. But for us, we've done so much back testing where we actually have the data to show that it actually has a higher than 50% win rate. It's actually even higher than that. I think our Forex was maybe close to, I think, 77%. So that's very high. You still have,
Yeah.
you have an edge in the market. And then same with US 30. I think we had like maybe above, it was well above 80%. So I think it was like maybe like 83 to 85%. So that's why we're able to do the 1-to-1. But a lot of people don't really, they don't think about the win percentage. They think about, oh, they just want to go for the big win, or they don't want to risk too much. But if you're using proper risk, like with your trade, if you're using 1 to 3% per trade, it shouldn't really affect your account because you need to lose like 33 trades back to back to back to blow your account in that
Yeah,
situation. Yeah.
exactly. Yeah, I totally agree with you, man.
Yeah. I mean, the main key is to really uh, trade with a proper mindset, because a lot of people, they learn one way to trade and then they come to K2 and they're like, oh, the 1-to-1 doesn't work. They don't believe it. And then they try to go back to what they were doing before and it doesn't work. But it's really hard for someone to relearn something if they've gotten stuck on one type of strategy already.
Yeah, I think it still comes down to probably I think the psychology. I think yeah, because like you can know every single strategy in the book. You can backtest everything, but if you don't have the balls to take the trade, or if you
Exactly. Yeah.
don't, yeah,
Exactly. Because you'll see a lot of people, they'll be very good at demo trading or, just back testing. They'll be like, oh, the strategy really works. And then
uh,
they go into actual application and they do the complete opposite and it never
yeah,
works for them.
they get how to say they take profits too early. They get once they get stopped out or once if they see another opportunity they won't re-enter because they're scared. They're scared. Yeah.
Exactly. They're scared or they revenge trade and they take the
Eventually,
trade when there's no opportunity and then they ended up, losing a lot more than they could have.
yeah, man. I just got the book, man. I just got the trading the zone, the physical book from a guy in my area.
Oh,
For
nice. That's a good
yeah,
book. Yeah.
so
I used to listen to that book actually. I had the book, the audio book. I listened to it almost every day. Like my earlier days in trading because that was my problem. I didn't have any trade psychology, but after listening to that a bunch of times, it definitely ingrained in my head. Once you have a strategy that works, just follow it. If you know it works, follow it. Don't go off track. and it should be able to play itself out eventually, like long term.
Yeah, and I agree with you, man. It's all about the your mindset lah. It's all about mindset.
Yeah,
I think it's more, yeah.
oh, go ahead.
I don't know. I think it's more mindset, yeah, than the actual execution. Your mindset is the one that probably executes the trade first before you even execute the trade physically.
Oh, exactly, definitely. And that's why like the K2 strategies work very well because it's all rule based, right? We have like a checklist. It's like if this happens, this happens, this happens,
Mm-hmm.
you take the trade. There's no subjectivity there. If you're just trading like basic like price action or just trading off the fly where you're not really using a strategy, then
Mm-hmm.
that's where you'll like second guess your thought. You're like, oh, this looks like a nice buy, but is it really a nice buy? Because you don't have any rules in place. Uh,
Yeah, I
and
mean, eventually you'll probably be profitable, but you will suffer losses first before you be profitable because you're less experienced. I think, yeah.
Exactly. And then you have to train the psychology with it as well. Like for the K2 strategies, it's like, if these requirements meet, just take the trade and then let it be. Because then at that point, it's all trade psychology at that point, because you already know when the trade's coming, you've taken the trade. It's your job to leave it alone and not look at it, for the next couple hours or so.
Yeah, man. Yeah, man. I just gotta learn how to work on my trade psychology by just being patient. Probably have to start meditating. I think
Yeah.
just
The
once
thing,
come.
the thing, it just comes with time. Like, especially like for you now, you're still new to K2. Once you start to see the consistent profits come in, you're going to start to trust it more and more over time. Obviously, when something's brand new to you, you're not going to trust it right away. But eventually it'll grow on to you. You'll be like, oh, okay, this actually works. If I just take every trade and I do the same thing every time, like you're very mechanical with your trading,
Mhm.
you'll start to just not care anymore. You'll be like, oh, I take the trade. Okay, if it hits, it hits. If it loses, it loses. It's okay because you're gonna take the next one as well following that.
Yeah, we just got to tune into that mindset, and then you should be fine. I think from then on.
Exactly. Yeah. Once you control your emotions and you control your mindset, it opens up so many opportunities because you can take trades and then you can go on with your day. Like for me, before I would take trade on the 30-minute chart, I'm looking at the chart like all day, literally just looking at it, wanting to, adjust my stop loss and profit or exit the trade in profit. And then I miss out on the whole move. So that's why I went from trading on the 30-minute to now the 4 hour, because I have set times when I look at the chart. The 4 hour candle closes the same time every day. So whenever it closes, that's when I look at the chart.
You
Other than
mean
that,
for
I don't
forex?
really.
Is it?
What was that?
You mean you're talking about the forex pairs? The 4 hour time
Yeah, yeah,
frame?
yeah, yeah. For the
Oh,
Forex pairs and also for the US 30, because the US 30, after we take the trade in the morning, I just let it be. I let it run and then I have alerts set up. So when it hits TP1, then I get alerted and then it'll just, tell me to, check out your trade. And then at that point, I either move my stop loss and profit or I continue to let it run.
I see. I see.
Yeah. Because it's a lot, like trading becomes a lot more fun and a lot more profitable once you're able to not worry about the trade. If you're able to take the trade and just let it be, it makes a huge difference with all of your positions and stuff like that.
Yeah, man. It's so much better that you don't have to worry about stuff. You just let do the trade, let it play out. If just adjust them at certain intervals when it hits, and you well, it's so much of relief also in that.
Oh yeah, exactly. Yeah, you're not stressed out. You're not stressed out. You're not watching the trade all day, hoping that
Yeah,
it goes in your direction because you already know it's going to go in your direction. Or if it doesn't, maybe it's just a bad trade. It happens. It's just
yeah,
like you understanding that bad trades come. Like it's not always going to be a guaranteed win every single time. As long as as long as you understand that it's not, you can't win 100% of the time. That's when you can start to grow like as a trader because then you don't have to worry about it as much.
yeah, man. It's all good, lah. It's all good. It's all part of the process. Just learn it a day at a time, and then probably be there in a few months' time, lah. I think a few months' time should be more than enough for me to like, get well versed. Probably I'm looking to first step is to finish my verification and the challenge, then the verification, then I can start take profits already.
Yeah, yeah, no, that's the main key. The main because during verification and the challenge, you don't have very much time. So you have to take higher risk to, make those profits. But once you get funded, you should just take normal trades. You don't have to, you can even just go for TP1. Because I think I was even calculating it. Like for me, I have 3 FTMO accounts. TP1 is was it 2,250 divided by 2. So if I only go for TP1, I still make about 1,000 per trade, 1,125. So you multiply that by 3. If I'm only going for TP1, I'm still locking in, nearly 3,375 daily. And we almost always hit TP1. I was looking at the results, and our TP1 is it hits like almost every time. Like let me see if I can pull up the results here.
It almost always hits TP1, then it goes back in drawdown and probably hits full TP, something like that.
Yeah, exactly. Because the thing is, if you're taking those trades and you're just, even if you're only going to TP1, you can still have some massive profits, long term. So like looking over here, I have these results here, and then going to November, if you took TP1 every time, you could still lock in a lot of profits each time, because we only had stop loss hit 1, 2, 3, 4 times in November, and that's the whole month. So if you hit TP1, it will still cover all of the losses for the month of November. And then same with if you did it in October, it's even better because we only have 3 losses, but we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 wins.
I'm pretty sure the losses here also, they might have hit TP1 before going to a loss, some of them.
Oh yeah, exactly. Yeah. Because if that happens where it just hits TP1, and then for example here, there's 1, 2, 3, 4, 5, 6, 7, 8, 9. So yeah, in this situation, if you have 9, 9 times like 9 wins, and then if you count these losses here, that's going to be only like 6. So you'd still be in profit. You'd still be in profit. Let me just do like 1,125 times 9, and then you have 3 losses. Why is my math right? Oh no, so like 1,125, times 9, it's 10,125, and then you just subtract that by 3 losses, right? 3 losses, 2,250 minus 2,250 minus 2,250. Even if you did that, only took TP1, you'd still be in profit, 3,375 for the month. That's more money than a lot of people make working a normal job monthly. And if you do that, you multiply it by 3 with like 3 FTMO accounts, you still lock in like a 10,000 for just taking, and that's only taking TP1,
Yep.
So it's still a very nice profit if you do that. And then if you factor in the Forex trades as well, a lot of the Forex trades actually hit full TP. You could probably let these run to just full TP instead of even moving your stop loss. And you should still be, heavily in profit. Like you have your US 30 wins, and then maybe you multiply that by 2 with your Forex wins. You can have, pretty nice profit at the end of the month.
I mean, your Forex trades are mostly phenomenal because they respect the support and resistance like crazy, man.
Oh yeah. It's so accurate. It's crazy how accurate it is. Even myself, when I first developed that strategy, I was amazed myself because I was like, wow, is this really happening? And it was a new strategy for me, so I wasn't able to see that it actually works, But then using it for the entire year last year, I was like, oh, this works all year round, and it works during like so many other market conditions. It's not just during the good market conditions, but it's also the trades during normal market conditions as well, like non-COVID year. Because I back tested it like a couple years back, but it didn't necessarily make a huge difference. So it works all year round, and it works during normal market conditions plus COVID conditions as well. So it definitely works.
And I think that's about all the stuff I needed to ask for now. For now, I'll probably have more stuff as I go along the way in the near future to ask.
Yeah, exactly. That's why I'm excited to use it this year, because now I'm more confident with it. And, I have a whole year of data from all of the trades from like January up until December, using that strategy, and everything has just been super profitable. So like now that we use this, plus we use the US 30, plus now the UK 100 trades as well.
Oh my goodness,
Uh,
yes, the UK 100.
yeah, the profits are going to be way more this year than it was last year, because now we have so many other trades to take, and we're able to let them run even longer. If I
Once
decide.
people find this out, the first thing they gonna probably don't do is they're not gonna believe it. Yeah, they don't believe it.
Yeah, I mean that's how a lot of people are too. Even till now, like whenever we have new people, nobody believes, like it's so unbelievable to them, because the thing is, a lot of people talk about having a good strategy, but for me, I have the actual data. Like I have all of the trades from December all the way till January. If people want it back, like go and check it if they actually work, and it's just unbelievable to a lot of people, and it's fine for me too, because this strategy, like all of my strategies and all of my information, this wasn't meant to be shared. This was supposed to be meant just for me. But ever since I started K2, I was like, I might as well share it with people. So like when people sign up to K2, it's like it benefits people more than it benefits me, because I can just be doing this on my own. But I don't mind sharing it. So if people don't believe it, I'm like, okay, well, just don't believe it, and if just sit around for a bit, and you'll see if it works or not. Um, but it's funny, it's funny because a lot of people just don't believe it, but the numbers, like the numbers pretty much speak for themselves, all the
Yeah,
profits and all the results.
numbers don't
Uh,
lie. Yeah,
and it's really up to the person if they want to believe it or not.
exactly. If they don't want to take a chance, they don't want to take a chance. Then that's so be it, man. They lose out in the end. But it's their problem, like we can't say anything much about that.
Exactly. Yeah. If they don't want to take a chance, that's why I always tell people like whenever we have the live session, I'm like, it's available to you if you want to use it. If not, then it's fine by us, because it doesn't matter if people are using it or not. We're still going to keep, profiting regardless. And
Yeah,
just the way that the strategy works is that it just works. It works all long term. Like a lot of people, like, for like stocks, if they do like pump and dump stocks where they tell people, everyone to buy stock, and then it goes up or it goes down, that's where they need people to actually be trading it, right? For us, we don't need that, because we trade, like for US 30, we only trade during a certain time period. We're not trying to push price up and down. And then same with the Forex market. The Forex market's so big. Even if you have like 1,000 people taking the same trade, it's not going to push the market. So, it's literally like unlimited uh, quantity for everyone to just make profit in the market with us, because we're literally just taking trades and we're getting out when we make profit, and then we just rinse and repeat for every other trade. It's not like the stock market or the futures market where you can actually push it if you have a certain amount of people trading it.
yeah, you're right. Absolutely right. Yeah, I mean, can't wait for the next how to say your next live session later on in the morning for your site. For me, yeah,
Oh,
for me it'll
definitely.
be nighttime, like yeah.
Yeah, it's opposite time for you. Yeah,
Yeah,
me too. I think US 30 is probably the most exciting, asset that we trade, because everyone's on the same page and everyone's wanting it to go in the same direction, and it's
yeah.
exciting in the morning, especially when it hits full TP. It's always a good feeling when it hits.
Yeah, man. I love how the reactions come when halfway through the. I mean, there were some times where during the session itself, during the YouTube live session, it actually hits full TP, man. US
Oh
30.
yeah, and then
I
everyone
think it
shows
was
their profits, and it's just amazing seeing everyone, because it's not
yeah,
just me that's making profit; it's like everyone else. And then in some situations, even some of the members make more profits than me, and I'm the one that's calling the trade. Yeah,
yeah, man, definitely. Man.
it's always a good time. That's why I like going live in the morning, because when I go live, it's like we're all kind of in this together, and we all have that morale. Like we're like really trading like a team. A lot of people, they like to trade on their own, or they like to keep the secrets to themselves. But for us, it's like it's open ended. All of us are here for the same reason, and we're all profiting. So it looks, it's always a good feeling. It brings morale, and it makes you want to
Yeah,
continue
man.
doing it.
Help. They always say this quote, help help others to help yourself, something like that. I don't know.
Oh yeah, yeah, I've heard that saying before. It's
Help,
kind of like
help
it's kind of like
help me to help you, or help others to help yourself, something like that. I don't know.
Yeah, I know what you're saying. It's a saying that people always say. I can't think of it as well, but I know what you're talking about. But yeah,
Yeah.
it's definitely a plus, because it's good to have the morale. Like even like for K2 now, before I was doing a lot of the back testing myself, and now we have our own back testing group of people that help with the back test, and it helps us tremendously because we're able to uh, find new strategies and find new things in the market that like even myself couldn't find, you know?
Yeah,
So,
man.
so
Because
yeah, I definitely see like a lot more new things coming within this year for sure.
yeah, for sure, man, for sure. It's only January. I mean, this month should be a slower month compared to the next few months. So we will just take it as it goes and just keep profiting, man.
Yeah, exactly. 100%. I mean, that's just how we have to do it. We just keep trading the market how we see it, and then we make adjustments when we need to. But I don't, for the most part, I don't think there's many adjustments that need to be made because our strategy is already very high win percentage. The only difference that we'll be making is increasing that win percentage even more,
Mm-hmm.
which will definitely help us, in the long run, when we have like those hot streak trading weeks.
Oh yeah, man. Can't wait for those weeks to come.
Yeah, it's gonna come. Right now it's still early in the year. It's only January 5th, so I think mid-January the volatility will start to pick up a lot more, and then it'll be pretty nice. Like the we always have like our hot months between January up until June, and then when summer comes around, that's when the market slows down. So we usually make most of our profits around that time, and then summer we still make profits obviously, but it's not going to be as easy or as smooth as it would be during the earlier months. And then we pretty much just carry on for the rest of the year until the following year again. We do the same thing over and over again.
Yeah, Shawn, just want to ask you, for FTMO, right? Let's say I'm doing an account now, but at the same time, I can also purchase another account and do it also, is it? Or do I have to finish up my first one and then I do it?
No, you can do multiple accounts. You can do as many as you want. It uh it it just doesn't really matter like how many accounts you do. But the way that I recommend doing it is pass your
Yeah,
first account first, and then you can stagger your next account from
yeah.
there.
Because I was thinking of once I completed the verification, the challenge in the verification, then I think probably I will do a few weeks of trading. Once I lock some profits in the actual profits, then I will go on and do the second account and so on lah. I think max is 3 accounts, right? Per person or something, right?
Yeah, yeah. You can have a max 3 account. The thing, yeah, once you pass your verification, you get funded. Your first month after being funded, just aim to make at least uh, any money in profit. So if you go like even a penny over in profit, you'll pass, and then they'll refund you your challenge fee, or you can tell them that you want a new account. So instead of buying a new account, you can just get a new account for free at that point, and then
Oh,
that's where
okay.
you can.
Oh, you are able to do it, is it? But you have to probably email them or get in touch with them.
Yeah, yeah. So once you pass your verification, you get funded. They will send you some contract to sign. Usually takes about a week. So like within a week, they'll give you your funded account, and then a month from your first trade on your funded account, that's where you have to show at least like a penny in profit. If you show a penny in profit, then they'll send you an email like, congrats, Vishnu. Here's your profit split. This is how much money you made this month, and then they're gonna also ask you, you want your refund for your challenge, I think $690. You want your challenge back, or do you want to just get another challenge for 100K? And then you can have the choice whether you want to take the challenge or if you want to get your refund back. Obviously, it's better to get the challenge because then you can just keep stacking those because then your profits will be double. Once you have that funded account as well.
Yeah. I probably have to top it up a bit lah, because I took the challenge. I bought the challenge during their 10% discount.
Oh yeah, yeah.
Yeah, probably have to top up a bit.
Oh yeah, it'll probably be better for you to just get the free account then because it'll be cheaper to do that than get the refund.
Yeah, yeah. I'll probably just stack the other account once I'm done with my first account lah.
Exactly. Yeah. It'll be easier that way. And then once you pass the two funded, you can merge those two. And then, do the same thing once you get the third one as well.
I see, I see.
Yeah.
Yeah, I mean, yeah, but I mean, that all looks good, but I just got to focus on my first account, man. Let's get it on.
Yeah. Don't get too ahead of yourself. A lot of people always ask me, "Oh, should I start my second account now?" And I'm like, "No, make sure you pass your funded." Because what happens is some people will get funded and then they'll forget about the funded account. They'll be focused on doing the next challenge, and then they end up losing the funded account. And I'm like, you should just focus on that first one first
Yeah.
before you get too ahead of yourself. Like you have to be able to learn how to walk before you run. A lot of people want to run right away, uh, and that never ends. That never ends well.
Yeah, never ever ends. No.
Yeah, exactly.
Yeah. So now it's already 8 plus there, right? 8:30.
Yeah,
Yeah.
yeah. It's about 8:30. The next 4 hour candle closes in about an hour and a half. So I'm probably going to wait for that, and then yeah, all of our positions right now look good. Everything's in profit. Odd CAD's in profit. Odd USD's in profit. GN is very deep in profit.
Yeah, man.
USD is in some slight drawdown right now, and then USD CAD is in deep profit as well. So everything looks good for the most part. And then the next time I'll be looking for trades would be at 10 p.m. my time, in about an hour and a half. And that's what I like about the 4 hour, about the strategy with the K2SR, is that I only look at the clock. I only look at the chart at the specific times every day. I look at the clock at like 6 a.m., 10 a.m., and then after that again, 6 p.m., 10 p.m. And then in the morning, obviously, we look at US 30. So it's kind of nice to have a schedule so you don't have to be on the charts like, all day.
Yeah, man. Definitely.
Yeah.
Definitely.
Cool. So let's see. Do you have any other questions? So we can I just want to make sure we cover everything before we get off for tonight.
Yeah, I think I'm good. I'm good. I think I asked what I needed to ask. Yeah, probably if I have any more questions, I'll just ask them in the chat or maybe another session, maybe a few weeks time or what. Yeah.
Yeah,
When
yeah, that'd probably be best. Probably just practice more. See if there's because the more you practice, that's when you'll start to have questions. You'll start to realize things, and you'll want to get some clarification. So probably practice for a bit, and then maybe in a couple of weeks or so, we probably have another session, and then we can improve on things that you have trouble with. Because you're gonna figure out what you have trouble with practice, and from there I can probably help you even better. Because usually if you've run into something, I've probably run into that at some point in the past. So I probably will have a good answer for you to help fix that problem.
yeah, man, definitely. I probably have to just back test. I mean, just do some testing, just learn from there, and then I probably have more questions to ask you.
Yeah, definitely. Yeah, just backtest. If you want to backtest that new strategy that you were looking at, you can do that too. And then you can see if it works. If it doesn't, if you don't like it, you can always just figure out something new and then move from there. Because there's a lot of ways to apply the strategy. There's not just one way of applying it. Like once you start to play around with the indicators and then you start to identify things on the chart, you'll start to notice a lot of things. That's pretty much how I created the strategy. It's like every time I ran into a problem with the strategy, I just add something different to improve it, and then there goes a brand new strategy, straight off the chart.
Yeah, man. Now, yeah, all looks good right for now. We just
Yeah,
have to
yeah,
uh,
exactly.
you just continue trading lah. Continue trading.
Yeah, just continue trading and then see if you have any problems. If you ever have any problems, you can either ask me on Telegram or you can just write it down and then we can save it for the next session, just depending on how specific it is.
I got you, man. Got you, Shawn.
All right, perfect. So I think that's it for tonight. I'm probably gonna go walk my dog. I don't know if you could hear him, he's scratching. He needs to go out to go pee or something.
All right, got it, man. You do what you need to do, man. I'll see you later on, man, for the
Yeah,
live.
yeah, definitely. So I'll see you on the live tomorrow morning, or morning my time, yours.
Yeah.
Yeah.
All right.
All
See
right,
you, Shawn.
good talking to you. Definitely. Yeah, just reach out if you have any other questions. Otherwise, I'll catch you tomorrow morning.
Yeah, man. All good, man. I'll see you later, man.
Definitely. See you later.